Holy interest rate carnage. Where are rates going? Through the roof. Short term, yes. Will they get better? Yes. I'll tell you why. Hey, it's Rick Elmendorf, Loan with Rick, Movement Mortgage, and boy, we've got such a tale of tales here going on with the mortgage interest rates, as we've seen rates skyrocket since January 6th. If you haven't seen my video already about what's happening and what happened on January 6th, go ahead and check it out on my YouTube channel. The link will be in the description below. Also, we have just been in an absolute slide. I want to show you a graph of what's really been going on in the markets. And you look at this absolutely nasty line that has been developing in the bond market, and rates have been just following this tremendous trend. Now, by the way, green is good, red is bad, down is bad because they actually run inverse. So the mortgage-backed security price and the yield is higher. So we want green, we want up. So now, if you look at a couple of things, I want to take you back in time and look at what has been going on. Now, this is a pretty nasty graph, but this has been our normal. This has been what I've been calling our artificial normal over the last couple of years. And then all of a sudden, we had an absolute albatross happen back there on January the 6th time frame, when the Fed came out and they made some pretty substantial mentions in their comments that they were going to be, that inflation was out of control, that they were going to be reducing their balance sheet, they were going to be curtailing their purchase of mortgage-backed securities. And additionally, one of the other issues is that we've got tremendous debt, and the Fed is going to be forced to take a bunch of their balance sheet and reinvesting those dollars in treasuries to help keep the payments on our debt low. So all this is really bad news for mortgage-backed securities. Coupled with these inflationary figures we've seen recently, it is just an absolute mess. Now, I will tell you this, is that on the short term, we're going to see interest rates rise. I mean, this is what happens when we have inflation numbers that we've seen of recent. However, I will tell you, and if I were a betting man, and I'm not, but if I were a betting man, I would be on the don't. I'm going to be on the part where it says, I don't know if interest rates are going to continue this downward trend. Why? Because we have too many potential really bad things going on in the world. Obviously, we're fighting this potential war in Ukraine, right? And the United States is going to get involved at some point. Just today, it was announced a NATO country is stepping in, asking for a no-fly zone. But what does this have to do with interest rates? Well, mortgage bonds love chaos. And the Federal Reserve kind of took a step back when the Federal Reserve chairman said, hey, listen, with all this going on in the world, we're going to maybe hold off on increasing interest rates. Now, what's that tell you? Now, a little story here. Mortgage bonds actually love it when the Fed increases interest rates. I know that sounds counterintuitive, but inflation is the arch enemy of bonds. So when the Fed actually hikes rates, that's actually good for mortgage rates. Now, I know that's kind of weird, but the bigger issue is inflation. Now, if the Fed chairman has come and said, hey, listen, I don't think we need to be too aggressive. Maybe we'll only go 25 basis points instead of a half, and we're going to kind of sit on the sidelines and see what happens. That's basically telling me that he is foreseeing a potential correction. And I'm not talking about a correction in housing. I'm talking about a correction in just our economy, that we're going to see a flight to safety. Now, money goes into one of three areas. You got cash, you've got bonds, and you've got stocks, right? So if money comes out of stocks, it typically goes into bonds. So typically you can see when the stock market is not doing so well, the bond market is doing pretty good. Conversely, mortgage rates are doing pretty good. Now, with crises like this, we're seeing a lot of money coming off the table. So I think we're going to see a plethora of activity. Now, this is just my, allow me to grab my, where's my crystal ball? No, but this is my guess at all this, that probably by late summer, maybe even midsummer, we're going to see a little bit of a rally with mortgage rates. Do I think we're going to see 2% again? Honestly, I think we might. I think we might see the interest rates dip below 3% again. We'll at least get in the low threes. And I mean, currently we're sitting at 4 or higher right now. So it's not that big of a stretch to be saying that. We've had a massive move to the downside in mortgage-backed securities, which is meaning that we have a tremendous increase in interest rates over a very short period of time. I mean, we're talking in 2 months, rates have gone up over 1.5%. So where I see things going, short term, they're going to go up. Should you be locking in your rate, buying that home now? Absolutely. I just released a video about how you can kind of see if a home's a good buy, 2 reasons why you should buy on another video. And then I released it just recently, my bid over ask calculator. So please take advantage of these tools. Hearken to my voice, please. Buy now, lock in now. You can float down and refinance later, but it's a crazy market, and I really hope things stabilize soon. I am praying for the Ukraine, praying for Russia. We need to be praying for our country. Anyway, thanks a lot for joining me on this video, and I will see you on the next one. Take care. Bye-bye.